do you believe there is a secret to success in trading? And my answer is, I absolutely do. Um, I can give you three famous answers and from three legends of trading. And I'm saying three of them because they were very impactful to me. So the first one, probably one that I'm still working on, is you have to learn how to lose. And yeah, this is not an easy one. So perhaps it's one of the most practical ones in terms of, that's the first thing that you need to learn how to do in a business where you're going to be losing so often. So that's probably one really good answer. The second answer was also very, very systematic, very good. It's one that says there are 5 secrets to success. The first one is having a proper methodology. The second is to have the discipline to follow that methodology. The third secret is to have experience. You cannot really accomplish anything with success in trading if you don't really have the experience of trading with real money. Trading with simulation or something like that. It has a place, but it won't get you to mastery. Trading with simulation will probably help you to test a particular strategy or something, but it won't really take you to mastering anything. And also, well, it refers to the fact that it's like a mango. Yeah, a mango needs to go through a phase, through a process to become ripe. And that process is not really alterable. You cannot really say, I'm going to make this mango ripe in 2 days or in a day or in 2 hours. You need to wait for the mango to be on the tree, and then when it's perfectly ripe, it will fall. Well, at that point, it's probably edible and delicious, and you cannot really rush the process. It has to go through a process. Same thing with the experience in trading. It's something that you are going to learn how to do, but you will learn with time and with the proper amount of trying and doing it again. And yeah, it takes time. Sometimes it takes years. Sometimes never happens. But yeah, it's experience is needed. So we have 3 elements there. Proper methodology, discipline to follow that methodology, experience with that methodology. And then the fourth one is to have the mental fortitude to stand losses. And again, that goes to the first answer I gave you. It's the same type of situation. That's why I told you this answer is very systematic. It really has everything that is necessary. And the fifth one, the last one, is to have the mental fortitude to stand winning. And I know that sounds completely crazy because why? I mean, if you're winning, everything is fine. But it's not. We can't go through this in details, but it probably will take hours and hours, probably an entire course on psychology. But let me put it this way. Let me give you a very quick answer to this, to give you an explanation to have the mental fortitude to stand winning. The worst losses I have ever had in trading have been after periods of winning so much that I recall one stupid situation in which I thought there was no way to lose. I mean, this was absolutely great. I was winning and winning. I thought, I never lose. And such an arrogance and stupid approach preceded one of my biggest losses ever. and one that I regretted for many months, maybe years, and actually almost took me out of trading. So you have to learn that one, to have the mental fortitude to handle winnings. But this is something that is probably not applicable at the moment. So at the moment, I would say the most applicable one would be to have a proper methodology. That the proper secret of success would be at the moment to have a proper methodology and the discipline to follow the methodology, maybe the experience to with that methodology. So for that, it probably would be a good idea if we discuss about methodology. Methodology entitles three main things. The first one is forecast. Without forecasting, no methodology can work. If you don't know if the market is going to go up, down, or sideways, how do you know if you want to buy, sell, or do nothing? So forecasting is an important element. If that forecasting is made with the proper analysis, great. If it is not made with proper analysis because you lack of the skills, well, you probably need an indicator that would project in the future what has happened in the past, and then maybe prices are going to go in that direction. But you need that element of forecasting. The second element is the element of timing. So once that you know the direction of the market, well, at least now you know in what direction to trade. Now you know if you want to buy, if you want to sell, if you want to do nothing. So let's say that, as in the case that I was answering before, the question that from that gentleman, that was a very smart question about the combining the Ichimoku cloud with the point and figure. Well, the Ichimoku cloud gives you immediately a direction. You know that the trend is up or the trend is down, or the prices are inside the cloud, so trend is sideways. So you know exactly what direction the prices are, and whether you buy, you sell, or do nothing. So the important thing is that once that you have that element, the forecasting element in place via whatever, but ideally a proper analysis, then it comes timing. Timing is when do you enter? And that's precisely, in that example, with that fantastic question, is by using point and figure. When prices break out, the X's go above the previous column of X's, you have a timing, a moment of enter. Well, and the last one is how you are going to manage those trades. Where are you going to put the stops? Are you going to trail the stops? Where? How? How many units are you going to use? Etc. So the methodology implies a lot more than let me learn strategy. This famous strategy that works with 5 bars when one is high. None of that, because that's just perhaps an entry, perhaps a timing, but it's not a methodology. Methodology entitles a lot more, and because of that, it's not that I don't subscribe to the fact that success in trading implies things like the typical answers that don't get emotionally attached, be patient, keep your losses small, etc. All that is good. All that is wonderful. But the reason why I just described what the methodology is, and the reason why my answer towards that question, my personal answer, is one that goes more in line with the third one. Remember I told you I was going to give you 3 answers. The first one was learn how to lose. The second one was with these 5 different secrets, having a proper methodology, the discipline to follow that methodology, experience with that methodology, the fortitude of mind to accept losses, and the fortitude of mind to accept winnings. And the third answer, which is probably the best answer, or the one that I subscribe the most to, is one by a legend of trading who is alive and makes phenomenal success in trading, making millions and millions of dollars every year. His name is Paul Tudor Jones. And his answer was, I attribute my trading success to the Elliott wave principle. And that's the answer that I subscribe the most. And the reason is because it involves everything else. When you learn the Elliott wave principle, you learn how to forecast. And that's the first part of a methodology, remember? But you also learn where and when to enter. So that's the second aspect of methodology, the timing. You also learn how to handle your trades, where to put the stops, how to trail your stops. Everything is in that, embedded in the Elliott wave principle. So learning the Elliott wave principle gives you the first aspect of everything necessary in success, which is having a proper methodology. The discipline to follow that methodology is also softly embedded in the Elliott wave principle, simply because if you know, for instance, that in the wave principle we say that we're going to trade wave 3s when they reach the level of 50%. Let's say that our methodology is to enter with half a position at 50%, the other half a position at 62%, and our stop at the 78% retracement. Let's say that that's our methodology. Well, there is no way that we see prices coming to 23% and then we enter it, right? Because that's not with the methodology. So in a matter of speaking, having the methodology so clear in our minds, like the wave principle does, helps us with the discipline softly. That what I have found is that every time that I work with a trader, sometimes traders with 40, 50 years of experience, seriously. I've had traders that have traded for 50 years and come to me because they change from being floor traders to now face the realities of electronic trading. And they don't know how to do that because the way that you trade on the floor is a lot different. And then there you can indeed scalp and buy 5 and sell 6s, seriously, and you make money that way. But you see what the others are doing, and so it's easier to buy 5 and sell 6s. But when you are doing electronic trading, you don't know what's happening on the other side. So these people have had some trouble with that. Many are floor traders, and they have come to me, and I have had people with 50 years of experience that have psychological problems because they started trading electronically and they have been losing and losing and losing, and they are not accustomed to that. So the way that we worked and that we have resolved the problems in the most effective way is by learning the wave principle, because now they have a completely different approach, a completely different methodology that allows them to trade electronically, but with a complete different attitude. And so their psychology improves immediately. So to me, seriously, the wave principle is the number one secret. I would put it more in general terms, like the basics of success in trading is unlearning proper technical analysis, and that is absolutely correct. But more specifically, I would say that learning the wave principle, because the wave principle, as I mentioned a few weeks ago, without the wave principle, I wouldn't be able to trade. And the reason is because the wave principle allows you to really forecast accurately and give you a methodology that is so perfectly timed. I mean, it's so good that you know when you are wrong. When you see prices moving 1 pip or 1 tick above or below the area where it's invalidation. So I don't think there is any other system. It's not that I don't think, I know of no other system in technical analysis that has that precision. So basically, 3 answers to the question of success. The first one is learn to accept losses. The second one is have a good methodology, a discipline to follow that methodology, experience, and the fortitude of mind to accept losses and accept winnings. And the third one, the most famous one by Paul Tudor Jones, is learning the way principle, or rather applying the way principle. And that's the one that I attach myself to.